Have you ever heard about that trader who turned a mere $10,000 into a whopping $2 million in just 18 months? It might sound unbelievable, but this trader's technique was surprisingly simple. Get this, the guy developed this strategy while traveling as a professional ballroom dancer. Yeah, I know, sounds crazy, right? This trading strategy is so cool because it's all about using the straightforward rules to figure out when to jump into a trade. Watch the video until the end, because if you don't, there's no point to watch it at all. Just skip it right away. But if you watch it right now, I have some surprises for you by just the end of the video, which you're gonna like them. Plus the fact I'm gonna be sharing with you just a part of the 100 times backtesting / forward testing this strategy, plus the results with you. So this awesome trader we're talking about is Nicholas Darvis. He wasn't just an investor, he was also a dancer, and he became famous for his brilliant trading strategies, which he talked about in his book. What's really interesting is how he came up with this approach. It was all based on his own observations of the market. Let's dive into the details of his strategy that made him millions. Darvis said his strategy could work on any time frame. Like most trading approaches, this technique was centered around buying low and selling high. That's why it could be adapted to different markets. He focused on stocks because cryptocurrencies weren't a thing back when he started. So here's the scoop on his original strategy. He'd buy when the stock hit a 52-week high and the trading volume shot up. After a bit of a pullback or a consolidation zone or area from that high, he'd draw a box around the high and low points of the price action. He called it the Darvis box. And as soon as the price broke above that box, he'd made his move. Cool, right? Sure, some critics say his success was due to the market's strong trend back then. You know, they claim you could have bought almost anywhere and made money. But let's give Darvis some credit. He didn't have all the fancy indicators and charts we have today. Speaking of which, let me show you a revamped Darvis box strategy that's perfect for today's markets. It's a fusion of his original approach and some modern indicators. And guess what? It's got a higher success rate. But before that, it really matters that which cryptocurrency exchange you're using. I highly recommend when you want to try any new trading strategy, you must backtest it. Or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it. I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. I have a surprise for you. If you use my affiliate link down in the description, you have the chance winning up to $35,000 worth of USDT just by signing up, doing your KYC, and depositing at least 100 USDT and start trading on it. So what you waiting for? Maybe it's going to be your lucky day. Ready for this? Jumping over to Trading View, we're going to add a couple of indicators. First up is the Unveiling W indicator. This one helps us confirm the current trend. Next, the Darvis box indicator is like the modern version of his classic technique. To top it off, the Wada Adder indicator not only tracks trends but also their strength. Now that we've got the indicators set up, let's talk about when to actually get into a trade. When the price is above the Unveiling W line and the Wada Adder histogram shows a green bar above the blue cross ATR line and the black line, that's our signal to buy. We also want the candlestick to close above the upper Darvis box line. That's Darvis short-term breakout sign. Stop loss goes at the lower Darvis box line, and we're aiming for a 2-to-1 risk to reward ratio. You can trade your stop loss to break even when you make 50% equal to your stop, make your trade risk-free. And for selling, it's the opposite. Price below the William W line, a red bar on the other histogram above the blue cross ADR line and the black line. The candlestick closes below the Darvis box line. That's our signal to short. Stop loss at the upper Darvis box line. Same 2-to-1 risk to reward ratio goal with the same, making the scenario risk-free just like before. Now it's time to share with you what I promised. So let's take a look at those trades using this strategy. As you can see, the results are crazy good. So why don't you just give it a try? Make sure to backtest it, forward test it, or as I told you before, use a demo trading account, whether it's on crypto or stocks or any other market. And here's my surprise for you. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci resistance levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. There you have it. Darvis' strategy was solid back in the day, and this modern twist aims to make it even better by using these indicators. Hope you found this breakdown helpful. If you did, show me some love, hit that like button, and hey, consider subscribing to my channel, all about sharing these awesome trading insights with you. Until next time, bye-bye.